Hello, I am Blackjack for Forex. I am a Forex mentor, and I just want to give a brief introduction of myself. Right, the reason I'm doing this is so that my story can inspire you. Um, I finished my university like few years back, and I was looking for what to go into. Then I came across Forex online, and I went into Forex. Though the journey wasn't very smooth, it was a very rough journey, very rough. I struggled, I cried, and all of that. But I kept showing up every single day. Now, the beginning of this class is to let you know that it's not going to be an easy journey, right? Just prepare your mind to win, right? It may not be an easy journey for you, but the most beautiful thing is that you have a method that will make it very easy, right? Now, I have gone through the, what's it called, the pains and everything. So I have been able to simplify Forex in a way that you will understand it. Now, anything I am not teaching you, just know that you don't need it. So everything I will be teaching you in this course is what you need, right? Everything you will be learning are the things you need to make money in Forex. So anything you are not getting or anything that I'm not teaching you, just know that you don't need it. All right. Now we'll be starting from the basics, which is market structure, right? What is a market structure? Market structure simply talks about the directional bias of the market. That is, market structure is simply talking about how the market is moving. That is what market structure is all about. It's simply talking about how the market is moving. That is the market moving upward? Is the market moving downward? Is the market moving sideways? Now, this will bring me to the types of market structure. Now, we have three types of market structure, right? We have the uptrend, we have the downtrend, and we have the sideways market, right? We have the uptrend, we have the downtrend, and we have the sideways market. Now, based on Blackjack or Forex strategy, you only need two trends in the market for you to be able for you to trade. Now, the first trend you will need is the uptrend. Just all you need to know is just the uptrend. The second thing you need to know is the downtrend. We do not trade the consolidating market. We don't trade a ranging market. You want to trade when the market is moving either upward or the market is moving downward. You want to be sure of the directional bias of the market for you to be able to trade. Now, for an uptrend, we must have heard of this before, that an uptrend is characterized by higher series of higher highs and series of higher lows. We must have heard that an uptrend is characterized by series of higher highs and series of higher lows. That is what makes up an uptrend. Now, let me do something here. This is the market, for example, now. Are you seeing that the market is moving upward the way it is? The market is moving upward the way it is. Now, when you have something like this, it tells you that the market is moving upward. So this is a perfect example of an uptrend, right? This is a perfect example of an uptrend. Now, for a downtrend, we have something like this for a downtrend. We have this for a downtrend. Now, when we have this is a downtrend. It is declining. Then this guy here is an uptrend. It is ascending. Now, let's look at this uptrend. We'll go to the downtrend. Now, do you notice that this market here, it started from here, this bottom here, and it ends here. Now, I just said not quite long that what makes up an uptrend are series of higher highs and higher lows. Now, I want to tell you how that higher highs and higher low come about. Now, we're starting from here, right? We have a low here. We have We have a low here. We have a low here, right? Then with the market started from here, then the market moved up to give us a high, which is here. It then move up to give us a high here, right? Now, do not forget that this was where the market started from, and it ended here. From here, it gave us a low. Then here, it gave us a high. Now, I want you to picture something now. Now, the market then moves down again to form another low, right? It then moves down again to form another low. Now, whenever the market is moving upwards, and it keeps forming highs. Every time the market keep moving higher, it keep forming new highs. Then in the process of the market going higher, it then come down a little. In the Forex, we call it retracement. It then retrace a little. Then we now say that this is a low. But one thing about this low is that this particular low here is higher than this low here. This particular low here is higher than this low. Now, because this low is higher than the previous low, it becomes a higher low. It becomes a higher low, right? It becomes a higher low. Here becomes your higher low. That's this bottom here becomes your higher low. Now, after this higher low, you will observe that the market then moves higher than the previous high that was created before. Now, the process of this market going higher than the previous high that it created before, this point here becomes your higher high. So we have here as higher high. Then this market now moves down again to give us another higher low here again. It moves up again to give us another higher high here. Like I said, that as the market keep moving up, it keeps forming higher high. And as you are having retracement, and I say that retracement is that little pullback as the market is moving in a particular direction. Here again, higher low here again. Like that. We also have this here. Higher high. This bottom here. Higher low. Then above here, our higher high again. Here, our higher low. Then here again, our higher high. Now, this is what we have for an uptrend. Now, this was where it came about, that an uptrend is characterized by a series of higher highs and higher lows. That is, as the market keep moving higher, 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 it keeps forming higher highs. Then that little retracement is what will give you your higher low. This is for an uptrend. Why for a downtrend, right? Now, we are starting from here. I want to tell you how the lower lows and lower highs came about. We are starting from here. This is a high point. We call it a high. We call it high. Then we then call here low. We call here low. Now, here this point here we are calling low, right? Now, if you observe, we have a pullback here to give us another high. But the high is not as high as the previous high. We started with here as our high. The market then moved down to give us a low. Now, this guy here goes up, right, to form a new high, but did not go higher than this previous high. Because it did not go higher than the previous high, we then have a lower high, right? Then this market then moved down to form a new low that goes lower than the previous low. So here becomes your higher low. Sorry, your lower low. Then as the market moves up again, we have our lower high again. Then in this place here, we have higher low here, lower low. Then here we have lower high again. Then here we have lower low, lower high, and lower low. So this was how lower high and lower low came about. It is formed by a series of lower highs and lower lows. Now, because the market is going downwards, it will keep forming lows. You know, when something is declining, it is going lower. So as the market is moving downwards, it will keep forming lows. While as the market is moving up, it is increasing, it is going higher, it will keep forming highs. So this is what we have as our, what's it called, market trend. So this is how to identify market trend. Moving further, I will go to chart examples. Now, I want to say something here. Now, do you observe something that this market here formed a high, right? This market here formed a high, right? This high that it formed here, as the market was going higher, it broke the previous high. Now, I want you to remember this. As the market is going higher, it broke the previous high. As the market is moving up to go and form higher high, it broke past the previous high point. So the process of the market breaking past the previous high point, that process is called break of structure. The process of the market breaking past the previous high point, it will give birth to break of structure for an uptrend. It is called BOS. It is called BOS, break of structure. I say that whenever the market is moving higher to break the previous high point, you can say you have a break of structure. That is, this is the previous highest point of the high. Then, as market is moving from the point of higher low to a point of higher high, and it broke it with a body candle, you cannot say you have a break of structure. Now, this layman definition of a break of structure is the market simply moving from a point for an uptrend. Now, the layman definition of a break of structure for an uptrend is the market moving from a point of higher low to a new point of higher high and breaking the previous high with a body candle. You can say you have a break of structure. Now, in this place here now, we have this here. We have this here, right? We have another break of structure here. We have another break of structure here. Now, in this place here, we have this. This is another break of structure. Break of structure. We also have another break of structure here again. We have another break of structure here again. Now, I want to do magic for you to see. Now, let's assume we have something like this now. We have a new higher low here. Then we now have this. Now we now have this. Here is our new higher low. Now, you know we have a break of structure here. Now, the process of this market, right, failing to go above the previous high, the process of the market failing to go above the previous high means that there is no break of structure here. So, if as the market is moving upward like this, if the recent one does not have a break of structure, it does not count. What counts is starting from the one that has break of structure. So this is how we have break of structure for an uptrend. I believe you are taking notes and I believe you are drawing this diagram. This video is recorded and I expect you to come back to the video over and over and over and over again. Now I want you to consume this video. Understanding this basic market structure, right? You are already on your way to be 50% profitable. All right, this is what we have for an uptrend. I said because this particular guy here, right? Because this particular guy here is not having a break of structure, it doesn't count. The one that we count is the immediate one that has a break of structure with the body of the candle. Or let's assume we have our higher high here, higher low here. And this guy now, the part that went above the previous higher high, went there with wicks, candle wicks. It is still not valid. I said what will make a break of structure valid is when it breaks the previous high point with the body of the candle for an uptrend. That is what will make it valid. Now, moving on to a downtrend. Moving on to a downtrend. Now, a break of structure for a downtrend is simply the process. Remember, for an uptrend. Now, I want you guys to draw your diagram separately like this. Write uptrend on one side, write downtrend on one side, so that you can be easily differentiating them. Do not write them on a separate. Do not write one at the front page of your notes and the other at the back page of your notes. Make sure you have one page you are writing both on, so you can easily compare and hear what I am saying. I said that for an uptrend, for a break of structure to be formed, the market will have to break the previous high point. That is, moving from a point of higher low to a point of higher high. Now, what do you think a break of structure for a downtrend will be? It is the opposite of the uptrend. Now, that means it is simply the movement it is simply the break of the previous low point. That is, whenever the previous low point is broken by the body of a candle, you have a break of structure. Now, this is the previous low point. In other words, whenever the market is moving from a point of lower high to lower low, you cannot say you have a break of structure. Now, moving on, we have this. Now, this is our low point here. right? And this market break past it with the body of the candle. So we can now say we have a break of structure here. Can say we have a break of structure here. Now, the next part we have a break of, okay, let me write it here. Let me write it. POS. Okay, let me stretch it out. All right. We have this here, break of structure here. These are break of structure. Now, the reason we have this break of structure here is because the market moved from a point of high to a point of low. We have a break of structure here. Remember, I told you something that as the market is going down, it keeps forming lows. That is, it is declining. As the market is going up, it keeps forming highs. It is increasing. It is going higher. Now, another point we have a break of structure is here again. I said break of structure happens when the market moves from a point of lower high to a new lower low, breaking the previous low with the body of the candle. So we have a break of structure here. We have a break of structure here. Now, the next point here is here. We have a BOS here again. We have a BOS here again. This is a BOS. Then this is another break of structure again. This is another break of structure again. Then this guy here. POS here again. So this is how a break of structure for an uptrend and for a downtrend look like. So on your own, take your time to compare both. So this is what break of structure for a downtrend look like. You have something like this. Now, I will be giving you guys assignment. I'll be giving you an assignment. The assignment is to do the same thing I did. Number one, on different pairs, right? Analyze 10 chart examples across currency pairs, synthetic indices, whatever you trade. 10 chart examples showing your break of structure and your higher highs and higher lows for an uptrend and for a downtrend. That is, for an uptrend, I want you to have something like this for an uptrend using chart example. We'll be going on charts right now. I want you to analyze the pair. Now, because of the fact that you're already taking this course, you are already an upcoming Forex trader, right? So I want you to analyze the charts, right? And mark out your series of uptrend and downtrend. Now, what makes up an uptrend? You label it the way I labeled mine now. Higher highs, higher lows, higher highs, higher lows, higher highs, higher lows for an uptrend. Then you indicate the break of structure for each of them. Like this now, the way I have break of structure here. Then you do the same thing for a downtrend. All right. Now let's now go on charts. Let's go on charts so I can explain further what I'm talking about. Now, let's take here. Now, very first thing you want to know when analyzing the charts is you want to know where did that particular trend start from. Go and always find out the starting point of a particular trend and find out the end point of that trend. Like this now, if you check carefully now, you will see that the market is moving upwards, right? Now, as the market is moving upward, you'll be having series of more of green candles. Okay, I think I have found the starting point of the uptrend. It is here. This is where we have our low, right? That is the starting point of the uptrend. Now, before you can mark out your high point, make sure you've marked your break of structure, right? Make sure you've marked your break of structure. Now, I want you guys to see something now. Let me draw your attention to something. Now, I believe we all remember the alphabets, right? Letters of the alphabet. Remember the A, B, C, D, E, F, right? Now, are you seeing that an uptrend is looking like the shape of a V? V, letter V. V for vulture. V for vote. Is giving the shape of a V. Now, the break of structure is giving the shape of a V. A point whereby we have a break of structure is giving the shape of a V. Break of structure is giving the point of a V for an uptrend. Why? For a downtrend, the break of structure for a downtrend is giving the shape of letter A. Look at letter A, letter A, letter A for a downtrend. Now, we can then say, since we have here as our low, now where is our break of structure? We have a break of structure from here. This is our break of structure. This is our break of structure. This is our break of structure. Then, where is our high point? This is our high point here. This is our high. Ish. That's our high. Now, after this high here, do you notice that the market then formed a new low? But this low is not lower than the previous low. So this low automatically becomes a higher low. Higher low. Right? Now, did you observe that we have a new high? But before you want to mark out your new high, you want to first of all check, is there a break of structure? Remember I told you that a break of structure must happen with the body of the candle. Now, this is what I mean. We have this guy here now. Now, look at the highest point it got to, the wick, which is here, the wick here, right? The highest point it got to was our high, the wick of it, right? So whenever you have candle like this, that the wick is going higher, you start drawing your break of structure from that high wick, not from the body, from the high wick. Then you trace it to see if a body candle break past it. Now, because this body candle break past it, it cannot be considered valid. So we cannot say that this high here is our higher high. Higher high. Now, after this higher high that we have here, the market then moves down to form a low again that is not as low as the previous low. So we will call here higher low. Now, after this higher low, do we have a break of structure from the last higher high? Yes, we do. From this last higher high, the tip of the wick is where we are drawing our break of structure from. Look at. It broke to touch the body candle, right? It broke above it before retracing. Now, the point you are making to be your higher high is the point it gets to first before your retracement. That is as it's moving like this, the point it gets to first before this retracement, the point it gets to first here, before this retracement happen, right? So here is the point I'm just considering. The point it gets to before a retracement is what you're considering as your higher, like that. Same thing for a downtrend. So here we have higher low here. Now this is the highest point it got to before a retracement of a higher low again. So here becomes our higher high again. And this line becomes our break of structure. So I will not waste too much, I will not take too much time. So this place here, this bottom here, becomes higher low here. This bottom becomes higher low. Now, if you observe now, you will notice that this guy have 3 lows. We have, this is the first low, this is the second low, and this is the third low. Now, in these 3 lows, right, in these 3 lows, the part that goes down the lowest is what you are marking as your higher low. So this middle guy here is the part that goes down the lowest. So here becomes my higher low. Then we have another break of structure again, broke with the body. Then we then have a higher high here. We have higher low here. Then this market retrace. Now make sure that a point you are, before you can give a point a valid break of structure, it must be having a V shape. Do not forget that V shape for an uptrend. Look at this, look at this, there is a break of structure here now. I use that it has given the V shape. Look at, it has given the V shape, and we have a break of structure here. It has given the V shape for an uptrend. So that's it. Then continuation, we have this here. Look at, we have this guy here. The reason why here is not valid is because it's not giving a very, okay, there's a little V shape here. Okay, look at it. There's a little V shape here. Okay, there's a break of structure there. We have another one here again. Another break of structure here. We then move high here. We have higher low here. We have higher high here. Higher low here. Higher high here. Right? Now, as market is forming higher low, higher high, the market is supposed to form higher low, right? How will it form higher low? It should not go lower than this previous low. Now, in this case that it goes down lower, right? You will not call here a higher low again because it goes lower than the previous low. You will not call this bottom a lower low. Why? Because it goes lower than the previous low. Then we now have this guy here to give us a higher high. So this is where we have another break of structure again. So this is how you label a break of structure for an uptrend and for a downtrend. For an uptrend and for a downtrend. This is how you label break of structure for an uptrend and for a downtrend. Let me find another example I will use to give a downtrend. All right, okay, yes, we have, let me use it here. This is good. Remember, I started by telling you that by the time when you see a market, you want to know the low points for an uptrend. Whenever you see the market, you want to know for what's it called? For an uptrend, you want to know the starting point and the ending point of that uptrend. Same thing for a downtrend. You want to know the starting point of a downtrend and the end point of the downtrend. It is very important you know. Right? Always make sure the very first thing you want to do, please write this in caps. The very first thing you want to do is to ensure that you know the starting point and the end point of a particular trend. Now, I showed you guys the starting point of that uptrend. Now, if you observe now, you will notice that this market declined, came down. This market declined, moved down. Right? Now, if this market moves down, where is the starting point of this downtrend? Remember I said that the starting point for an uptrend, it starts with a low. So the opposite for an uptrend. The starting point for an uptrend, we always start with a high. With a high. So we have this guy here as our high. Right? After this guy has formed high here, it then formed a low. Okay, let me read. Okay, it then formed a low here. It then formed a low here. After this low, right, did you notice that the market pushed up to form a new high, right? But the high did not go low, did not go higher than the previous high. Because it fails to go higher than the previous high, we call it a lower high. That's what we have here. A lower high. Now, after this lower high, it then moves down to form a low. Now, this low that it is forming, this new low, goes far below the previous low. So because it is going below the previous low point, it becomes a lower low. Becomes a lower low. Now, after this lower low, it then tried to form a lower high here because this was where it got to again. Formed a lower high here. Now, after this lower high here has been formed, the market then moves down again to form a new low that goes lower than the previous low. So here it becomes your new lower low. Lower low. Now, it then push up, which I call retracement. It then push up to form a high. But this high did not go higher than the previous high. Because of its failure to go higher than the previous high, we have a lower high here. A lower high here. Now, after this lower high here has been formed, the market then moved down to form a lower low. That's what we have here. Now, if you check carefully now, you will notice that there are two lows here. This is very beautiful. There are two lows here. Now, which one are you going to take? We have this low here and we have this low here. I said I always take the one that goes lower, the more. So I will take here as my lower low. Then up here as my lower high. Lower high. Then this bottom here again as my lower low. Then look at, we have here again as our lower high. Lower high. Then we have here again as our lower low. Right? Then, so this is the starting point and the ending point of a downtrend. So this was how series of lower lows, lower highs, lower lows for a downtrend came about. Now, I said something about an uptrend break of structure, right? That whenever the market is moving from a point of higher low to a point of higher high, and it breaks the previous high point with the body of the candle, you have a break of structure. Now, same thing for a downtrend. Whenever the market is moving from a point of high point to a point of low point, that is, the market is moving from a point of lower high to a point of lower low, breaking the previous low point with the body of the candle, you have a break of structure there. You have a break of structure here. BOS for a downtrend. Now, same thing for this guy here. As it has come to this higher low, as it is going down to form a lower low, it then breaks the previous, what's it called, low point. You have a break of structure for a downtrend. Then we also have another one here again. This is the break again. Now, before I move to this next one here, do you notice that I said that it must break past a body? Now, do you notice that what makes this break of structure valid? It is not the fact that this week broke past it. No. It is the fact that after 2 weeks break past it, it then touch a body. That is the most important thing. Let it touch the body of the candle, not the wicks of the candle. The wicks of the candle are those tiny threads, this long thing, not the fat one, the tiny one. That's the wicks. If a wick break past your, what's it called, your previous low point, it will not be a valid break of structure. It will not be a break of structure. So what makes this break of structure, right, to be valid is because of the fact that after a wick break past it, it then touch a body. So for your break of structure, it should always touch a body. Same for this guy here. Now from this low point, it is touching a body. So we have BOS here. BOS here. Then here again, we have break of structure here again. Break of structure here. Then for this guy here, we have a break of structure here again. Are you seeing that this is just so easy? Break of structure. Are you seeing that it is just so easy? So this is all you need to know about the basic market structure. Now, there is something I like to tell my mentees. I always tell them that it is not learning that makes perfect. It is practice that makes perfect. Now, do you want to be perfect in this thing? If you want to be perfect in this thing, I want you to put in the work of watching this video more than 5 times and practicing on charts. That is, as you are watching the video, you immediately go on chart and try to do what I was doing in the video. That is how you gain mastery. That is what brought me to where I am right now. Now, there is no time to play around. This is the time for you to lock in. There is no time for you to play around. This is the time for you to lock in. Now, how can you lock in? As you are watching the video, you are learning something, you are taking down notes, you are drawing diagrams on your notes. You go on charts. You try to do what you see me do on charts. As you are doing what you see me do on charts, that is how you are gaining mastery. You are learning something. You are learning very fast. So I want you to put in the work of studying and consuming this video. The person I learned Forex from, I studied a video up to 100 times before I could gain mastery. Now, this is the same thing I want you to do. I have come to the end of today's class. Now, I want you to take so much time watching and practicing at the same time. If you can watch this video, right, up to 10 times, the better for you. The more you watch it, the better you understand. The more you watch and practice, the better you understand. Now, what will give you money in Forex is no knowledge. A lot of people have knowledge in this Forex. What they don't have is understanding. Understanding is where the money is. So what I want you to do is to have understanding of this knowledge. Have a depth understanding of this knowledge. So as you are watching, you are practicing. Immediately you just see me draw a lower high, you go on your chart, you go and draw your lower high. You see me draw a lower low, you go on your chart, you try to find your lower low. Do not forget your starting point and your beginning point of a trend. That will be the end of today's class. Peace and love. I remain Black Jeff for Forex. Okay, after this course, write down your questions, right? If you have any question after studying, write down your questions and send to my DM. Write down your questions and send to my DM. Now, remember, I gave you an assignment. After you've practiced on your own, you've seen that what you did and what I do, they are now the same thing. If you know that what you are watching and what you are doing is not the same thing, do not send it to me. Keep watching the video till what you are doing and what I am doing are the same thing. Before you cannot send it to me as an assignment. Send me your assignment for me to mark it, then we can proceed to the next class. So what I am simply saying is get this knowledge, get understanding of it. So that will be the end of today's class. Now, I want you to follow me on all social media. I use the same handle on all social media, right? You see it below. You see it somewhere on the chart. You see my handle on the chart. I am Black Jeff. That's my X handle, my Instagram handle, my Telegram handle. So just follow me everywhere. All right. Peace and love.